You see a theme? I can't keep a job. I called my brother Joe and I said, Ricky fired me yesterday. And like any good brother, he didn't say, how can I help you? What can I do for you? No, he said, congratulations. This is the biggest opportunity of your life. You have all the resources. Now's the time to do it for yourself. And here I am, $200 million worth of self-storage later.
I'm really excited to introduce, we got John Maines. John is the chairman of the board at StoreSuite, an asset-based self-storage platform. He's got a proven track record. He's helped create multiple companies valued at around $300 million, and he's successfully exited 2 of them for $115 million and $92 million. Not bad, right? Since 2005, John has acquired over 1.5 million square feet of properties nationwide, and he's the author of The Working Class Guide to Building Wealth with Self-Storage. Welcome to the show, John. Did I miss anything there? You know, a couple million here and there. Yeah. Yeah. So I'm excited to have you on. So every guest I've had on the show and everyone that I've had at this event, and this event has evolved over the years. We took a break during COVID because they wouldn't let us do anything. I think you're the first non-residential investor I've had on the show. Yeah. So, and over the years, I know a lot of friends. They've moved into mobile home parks, multifamily, self-storage, commercial, and all this stuff. It's just, you're the first non-residential. So we're really excited to, I'm selfishly excited to kind of learn a little something. And I'm sure the audience is too. Let's kick it off. Get into your, how did you even get involved in self-storage? Because the gateway to real estate for most folks is residential, and especially single-family residential. How did you get involved in self-storage?
For those of you that are bald like me or gray-haired like me, back in the 90s, there was this guy by the name of Sheets that was on TV of how to buy real estate with little or no money. And I was sitting on my sofa in New Jersey with my brother James, and I said, it was $160 for his program. And I said, let's buy that. And my brother James said, I ain't got $80. And I said, well, I ain't got $160. So I went and bought a book at Barnes & Noble. And I bought a book on how to buy real estate with no money. And this was in probably 1991, maybe 92. I bought a couple, read that book front to cover while I was on vacation. Everybody kept telling me, well, when was it copywritten? And I said, in 82 or something. They're like, well, the laws have all changed. So I went and bought another book, How to Buy Real Estate with No Money in the Tighter, Tougher 90s Market. And it had the same stuff in it that was in the book that I bought that was copyrighted in 83. So I bought 4 single-family homes, a 3-plex and a 4-plex, all with no money. And I'd never do it again. So,
just for context, because interest rates have, mortgage rates, it's kind of a topic now. What do you recall what the mortgage rates were at that time?
They were in the 7s, just like they are right now.
So you were able to buy successful investment properties in the 7s?
I didn't say successful.
All right, story. Keep going.
I made some money, lost some money. I think the biggest mistake that I made is I moved from New Jersey to West Virginia, 550 miles away, hired a property management company. They spent money like water. And because I was 8 hours away, I couldn't go fix things myself and all of that. Like they built a set of steps, like these metal steps right here, and charged me like $4,000 back then to build the steps. And I didn't have any choice, right? Because I was 8 hours away. So on some of them I made money and lost money, but after about a year of going through all that pain of taking money out of my own checkbook and funding the things, I finally decided to sell them all in New Jersey. And I took a hiatus. I was in retail. I always say like the Walmarts and Kmarts of the world. And so I was running a corporate job at the same time as doing private investments on my own. Took a hiatus from that, worked my way up the corporate ladder in retail, and got burnt out from retail. And in 2005, took a hiatus from life. Moved in with my mom at 36 years old. Also, not a good suggestion to move in with my mom. I might move in with your mom, but not mine.
But it's come back though. That's like the popular thing to do these days.
That's correct. So, so I was looking for. I've worked my way up in retail to regional manager and district manager and stuff, and I was looking for something outside of retail in the corporate arena that was multi-unit leadership. And I started to apply to things like general manager of warehousing, 3 warehouses, or like you guys know, in multifamily, I started to apply to regional manager of multifamily. I applied to a district manager's job in self-storage and didn't even know what I applied to, but it looked interesting. And that was with a company called Uncle Bob's Self-Storage, which you probably remember around town. They turned into Life Storage. And then a year and a half ago, they turned into Extra Space. So I landed a district manager's job with them, and I learned how to operate self-storage working for them. I worked for them as a district manager for about 2.5, 3 years, got promoted to regional vice president of the company. And as a reward, they moved me to Buffalo, New York. And I say that sarcastically because there was a lot of snow. And I was an RVP for them for about 3 years. So total, I was like there 5.5, 6 years. Got fired and ended up networking back to Texas because I was in Texas at the time. And landed a job here locally as the COO of a regional player. He had 55 self-storage properties, and I ran his company for about 5.5 years. Got fired. You see a theme? I can't keep a job. And that was at October 21st, 2015. Not that I remember that, but on the 22nd, I called my brother Joe, and I said, Ricky fired me yesterday. And like any good brother, he didn't say, how can I help you? What can you do? What can I do for you? And he said, congratulations. And I was like, what? He said, congratulations. This is the biggest opportunity of your life. You have everything going for you. You have all the resources. Now's the time to do it for yourself. And here I am, $200 million worth of self-storage later.
Seems like it worked out a little bit.
It worked out okay.
So having experience with single family and going through the the love-hate relationship you may have had with those properties, and now getting into self-storage and your experience with self-storage, what's the difference between both just operating and also I guess how you approach returns with self-storage?
So I think there's a couple differences. The one difference is self-storage is an actual operating business inside of a real estate play. So for those of you that might be a plumber or electrician or own a coffee shop or whatever, the operational aspect of that is what storage truly is inside of the real estate play. So for those of you that are in business, you bring in the revenue, you pay your expenses, whatever's left over in a business that you rent from the building, whatever's left over after you pay rent is for you. In our environment, we have that same operating business of, quote, making coffee every day, and whatever's left over, we pay our mortgage with it. And where we make our money is on the increased value of that property, not necessarily on the operating business. So what most people don't realize is that storage is an operating business inside of the real estate play, where if you buy a single family home, you can rent it out. And once it's rented, there's not a lot of work to do. There's work every single day for us to do. Like we got to pick up trash. We've got to We got to sweep out units. We've got to fill out the lease because our leases are 30 days. Like, it's an actual operating business inside of the real estate play. That's one thing that people don't realize.
And the pros and cons there, and you can kind of correct me if I'm leaving something out. I mean, the pro for the single family is it's kind of done outside of things that come up, but you can't do anything. It's more of a hold and pray on that the market's going to help you out with appreciation. With self-storage or any commercial type asset, there's a lot you can do to appreciate the value.
Well, I can actually add the value to it myself. So as long as I continue to increase revenue and control my expenses, whatever that bottom line NOI is what truly adds the value to it. So here's the other cool thing about storage is when you turn over a tenant, you have some type of capital improvement to that asset most of the time. Replace the garbage disposal, take out the hardwood floors that they destroyed, all that kind of stuff.
Never happens.
Never.
Ever.
I sweep my unit out. It's a dustpan and a broom. And the laws in almost every state are against you guys in single family if somebody doesn't pay you. Try to evict a single mom with 3 kids, where the laws for us, it's just stuff. So I can evict anybody I want to as long as they don't pay me. So the delinquency laws for me compared to single family are much better in our favor than they are in single family or multifamily.
So you didn't have all that folks that just started to not pay during COVID and hole up. And how did the COVID laws, how did that affect self-storage?
It depends on the jurisdiction. So I've owned self-storage properties all over the United States. I've owned them in Oregon and Washington State. I've owned them all over Texas. I currently own them in South Carolina, New Mexico, Louisiana, Arkansas, Texas. I've owned them in Oklahoma. So I've owned them in all these different states that have different ordinances. The good news is during COVID, most of my properties were in Texas, and only one of them was in Austin. And I'll let you figure out what political demographic there is. And there was only one of my stores that put restrictions on me being able to sell their stuff. And I'll let you guess where it was. It was in Austin, Texas. Everywhere else I could run. We were considered a necessary business during COVID, so we were open, and we took all the precautions and everything like that. But I had already exited the Oregon properties and the Washington State properties, and they were flat out shut down. Because I'm still in association. They bought me out of those deals, and they got shut down where they didn't have to pay them, and they weren't allowed to auction their stuff off. So it really depends on where you were at. And, everybody asks me where I would buy a property at, and I always say in owner-friendly markets. So I always say I'd rather tell you where I won't buy properties than where I will. And I won't buy in California, Oregon, Washington, New York, New Jersey. Anybody get a theme going here? Okay. So anyway.
How do you, most folks here probably have at least a basic idea of how to approach a single family property. So if you get a deal from a wholesaler, you've got some numbers, you've got a purchase price, you have a estimated repairs, you may have market rent. How do you approach a self-storage deal if something comes across your desk where you've got that 30-second scan to even know, is this worth looking into more?
That's a great question. I got a really good answer. For those of you that are math people, pull out your calculators because it's really, really easy because I can do it in my head. So you ask, if you're looking at a self-storage property, ask them what they're doing in revenue on a monthly basis. And if they say $20,000, just for a round number, typical self-storage does a 40% expense ratio. So you do 20,000 times 12 times 0.60, the opposite of 40%. And what's left, if you divide it by a 7 cap, it's multiplied by, I believe it's 100, right? Am I right in doing that? You have math, is 100? $2.4 million? That's a pretty damn good guess, ain't it? Yeah. So, so the 100 mark on the monthly. So if you take your monthly times 120 is what the number is for a 7 cap, is you take the 20,000 times 120, and that gives you your purchase price of a 7 cap ratio on 40% expense ratio. For every, from 120 to 115, from 115 to 110, from 110 to 105 down to 100, it's a quarter basis point on cap rate. It's not exact. You're going to come up with 2.2 million, 113,000 or something, but it gives you a general idea. And in today's market, you should be buying self-storage somewhere between a 7 and an 8 cap. That's not what's on the market. Most of them are at 6s and 5s and things like that. But if you take that monthly revenue times 100, that gives you your 7 cap ratio. That's where you should be. So if it's doing $20,000 a month, you should be buying somewhere around $2 million.
So for single-family homes, there's a lot of operators or lenders, hard money lenders, private money lenders, where you can get into, and you've read the books, the no money down deals. Those were yourself.
I wrote the book.
You wrote the book. And we got Jet Lending in the right over there. You know, they'll fund your deals, 100% purchase price, 100% repairs. You just got to buy it cheap enough. How does that work with self-storage? I mean, it's commercial property, a little different. How does the financing aspect work for acquisitions?
So I hear a lot of people go, well, I can use SBOA lending, and they'll lend you up to 90%, which is true. But your mortgage payment is 90% of the purchase price. So your NOI and your cash flow is really, really low. On top of the fact that SBOA is extremely painful. I had a full head of hair when I did my first SBA loan. I had no gray in my beard. So it's extremely painful. The first SBA loan I did, I put the property under contract. We did the 7A program, and it took us 6 months to close. Well, your sellers get very impatient with that kind of stuff. And in commercial real estate, if you're going to go out to them and go, well, I'm doing SBOA, and I'm doing either general financing or I'm paying cash for your property, even though I'm $100,000 less on my purchase price than you, they're going to take my offer because of the guaranteed of sale. The proximity of getting it across the finish line is much greater than that SBOA. My first deal I did convention. My second deal that I did with the partner that I currently have, we did SBOA on a $6.7 million loan, and I almost lost my $100,000 earnest money. I was 2 days away from losing $100,000. At the time, I had $160,000 in the bank and put up $100,000 of it. We closed 2 days before I was going to lose it. It was painful, and I was yelling at the brokers, not with good words. So different than that. Right now in today's market, 70% on leverage, 7.5, 7.75 interest rate. So again, like you're saying, you got to buy it right. If I go in and buy the mom and pops that don't have a website, they don't offer tenant protection, all of those kind of things, I can instantly make money for people.
Yeah, that's interesting. Now that's actually higher than what I would have thought. Because I know with at least if you're not using bridge with multifamily, you're 50 to 60% with today's rates. I mean, you can get higher with certain bridge products. So
I know right now if I put up more capital, I can lower the leverage and get better terms. So I can get probably 7s on my interest rate by getting to 60 or 65% leverage. So they look at it as a balance of risk, right? So if I'm putting up $200,000-$300,000 more money, they're like, all right, I'll lower your interest rate and give you a little bit more flexible terms.
And on the equity side, so you've talked about the debt. On the equity side, is this your personal cash, or whether personal or your company's cash? Or are you syndicating?
I do syndication, but it's also my personal cash. We started to give a little history on StoreSuite. We're not only owners operators of the self-storage properties, but we own the service companies that service the industry as well within the platform. So all the website platform and marketing platform, we service the industry for that in StoreSuite. The protection plan, like when you rent a space in self-storage, you got to take insurance, just like renter's insurance. We own that company too. So we get a nickel, so to speak, every time somebody rents a space. We own a bunch of tech in the storage industry, and we own a property management company that manages other people's properties for them. So all of that revenue is part of StoreSuite as well. So we merged all of those companies that I was part owner of last January, so just over a year ago. And last March, I put $1 million of my own money in the company. Robbie Dunn, my other business partner, put $1 million of his own money. And what we're doing right now is we're out raising $23 million to go on a run to buy self-storage properties.
Yeah, in a syndication.
In a syndication, yeah, with our money. And all the companies donated the values of their company into StoreSuite as well.
And so some folks may not know what a syndication is. Can you break that down?
Sure. It's where you go out and raise money for the equity. You typically sign on the debt as a sponsor, and then you share in the upside on the back end. So our splits are 68-32, 68% to equity and 32% to sponsors. But we only make the 32% when we raise the value of the company by $1. We get 32 cents of it. So we have to add value for us to make money.
Yeah, yeah. So in other words, when you've got the debt, if it's $1 million, 70%, so you've got $700,000. So that other $300,000, it's going to come from you, business partners, or if you're going to syndicate, everyone. You got 50,000 here, 25,000, 100,000. Everyone's going to chip in, and you're going to have a pro rata rate or interest in the company, and you're going to get certain returns, like he mentioned. So that's a syndication, and it's very. You go through syndication attorneys. It's a ridiculously long document with lots of disclosures.
Yes, it is, and a lot of money to build those documents.
Yes, a very expensive piece of paper.
Yes, it is. Ours is 120 pages long, to give you an idea.
Yeah. What's the strangest thing you found in a storage unit?
It's funny because everybody knows Storage Wars. You see it on TV all the time and everything. And that's when I tell people I'm storage, that's one of the number one questions I get all the time. Oh, so like Storage Wars? Yeah, just like Storage Wars. Obviously dead bodies. I mean, that's something. I've obviously found people living in them, which is against our contract. I've had team members hang themselves in units. So, but the story I tell all the time is Mike Latta, who's our regional director of operations. He was in a property in Dallas that had these big double-sided boat and RVs where you can drive through them. So they have a door on each side. And he walked up, and we don't allow you to use our electric. And most of the units, if it's a boat and RV unit, have electric. So there was an extension cord coming out of the unit plugged into our plug on the outside of the building. No lock on the door. So he goes to open the door, big 14-foot door, and it's locked from the inside. So there's a door on the other side. So he walks around. There's a lock on the other side. So he goes to the office to get a set of bolt cutters. By the time he got back, the tenants were renting 3 bays in a row right next to each other. They took panels of metal out of the middle of the 2 bays, and they were stealing F-150s and F-250s. They'd pull them into the first. They would strip them down, move the motors and stuff into the second one, strip all that down, put them in boxes and so on, put them in the third one on pallets, and then ship all the parts to Mexico.
little chop shop
And he
going on.
found a full-blown chop shop in 3 of his units.
Which they probably could have got away with it longer if they just paid for their own
If
electricity.
they did not plug the wire into the outside.
It's the smallest thing, so it gets you.
It's so stupid. But again, it's an operating business, and you know what you're allowed to do and not allowed to do, and you're not allowed to use our electric. It's that simple.
And it's not a good idea to run a chop shop.
Yeah, well, there's that.
Yeah, just general life advice.
Yes.
What advice do you have for beginners looking to get into self-storage?
There's 2 pieces of advice that I give everybody because I get approached all the time about mentoring people, and I've mentored a lot of people in storage. And one of the things I tell everybody is get involved. So there's the Texas Self-Storage Association. They have luncheons all around the state. They have, just last Wednesday, they had one here in Houston. They have them all over the state. It's like $20 or $30 to go to the luncheon, and you're paying for the food at Maggiano's or wherever they're having it. And you learn, like they do this kind of stuff, but about storage. This one in Houston last week was about storage development, where the life cycle of storage development is right now. So the best thing is to get in the right room. And if you're part of the Texas Self-Storage Association and you're going to the luncheons and to their national conference, you're in the right room. This industry gives till it hurts. Like, everybody will share anything and everything with you in this industry. It's one of the last industries like that will share with you. And the reason is storage is a very micro business. It's a 3 to 5 mile radius. So as long as you don't have the property right across the street from me, and even if you do, I'm going to try to influence you to raise your rates so that I can raise mine. But it's an industry that if I tell you in Sugar Land how to operate your property and I live in Katy, you're not going to impact my business at all. But I do help the self-storage industry that way. So I always say get involved. That's first. Get in the right room. Give to that room through what you have to offer, free, and then have an ask later on, and people will give back to you. That's exactly how I've done it. I learned how to run self-storage properties with Uncle Bob's. So I started going on the speaking tour and teaching people how to run self-storage. And next thing I know, people were walking up and going, "Hey, if you ever buy a property, I'll give you $100,000. What? Like, really? So little by little, I built a reputation of giving. And at some point I had an ask. And since then I've raised $52 million to buy storage. So as you give, you'll get. That's the first advice I give. The second advice I give is hitch your wagon to somebody else's caboose, because it's a lot easier to do it that way. So go find somebody that's good at it and either give them your money, give them your resource of whatever it is. If you have people in your circle that would be willing to invest, bring the equity to the table and you'll get a piece of the pie. Because there's a lot of people out there that can find a self-storage property for the right price, but then don't know what to do with it. And that's how I've been able to do 51 self-storage properties. They bring it to me, I give them a piece of the pie, and we buy it together, and I do the rest. So hitch your wagon to somebody that knows what they're doing.
That's pretty much everything that I've done. So it's nice to know. I don't know. Maybe
I have no original ideas. Everything I've done, I've stolen from somebody. So,
well, it's good. I'm on the path to maybe having $300 million in company. But yeah, just kind of reiterate what he said. I mean, my wife and I, we started going to hamburgers and hot dogs at Eddie Gann over at Jet Lending.
Mr. Eddie, where is he anyway?
Yeah, so that's what we did. And it was just like, I was talking about in the beginning, like taking down the nuggets. That's why I just went there, wrote down a couple nuggets, and then I'd go to another event later on in the week. And I did that consistently. And if you do that over 2, 3, 4, 5 years, 10 years, like, you gain a wealth of information And then you start to become the expert. It doesn't take you 5 years. After 6, 12 months, especially if you're doing stuff on the side, like you start to become the expert yourself. And then you become an attractor of money, i.e. private money lenders or investors and deals. And as a real estate investor, you need both. It's a nice
Everybody
ecosystem.
asks me how I find my deals, and my answer now is my deals find me. So we're out on social media, like everywhere. I do a lot of this kind of stuff, and somebody's going to find a deal because their brother-in-law has a 250 space property down in Manville, and he doesn't know what to do with it, and he's not really in the industry. He built it 20 years ago. And what they do is they call me and I go buy it. And there's no broker, there's no nothing. Like,
so as you were talking, my phone's buzzing because deals are finding me.
That's funny. Yeah. So, yep.
All right. So just kind of wrapping up, I've got 4 questions I ask everyone. These same 4 questions. First one is, if you could give advice to your 20-year-old self, what would that be?
Do it sooner would probably be my first bit of advice. I was comfortable in corporate America. I was making $210,000 a year before I got fired. Like, that's a comfortable living. I would have done it a lot sooner. I've made a little bit more since then. So I would have sped up my timeline. I was a district manager in retail for 11 years. I would have only been a DM for 3 or 4 years, went into the regional for 3 or 4 years, vice president 3 or 4 years. Instead, I was in those roles entirely too long. I would have sped my timeline up. The second bit of advice that I would give my 20-year-old self is keep going. You're going to have ups and downs. Keep going. I'm too pig-headed to fail is my problem. So I just keep going. I try to find an answer. I try to find a fix. I try to steal your idea and your idea until I get it right, and keep going.
You only fail when you quit.
That's correct.
What book or books have greatly influenced your life?
There's a Basic and Standard of Bringing Out the Best in People by Aubrey Daniels. That's talks about picks and nicks, or How to Influence Friends, and by Dale Carnegie. The reason everybody has a badge on today is because your name's the number 1 name in the world to you, but not to anybody else. So, and that's the first chapter of Dale Carnegie's book, is use people's names all the time. I listened to an audio book by Keith Haring a couple years back called Attitude is Everything. And one of the things I got out of that, for those of you who travel a lot and your flight gets canceled, he said that he has a love of popcorn. So when his flight would get canceled, he'd go try to find popcorn someplace. I have a love of ice cream, so I try to go find ice cream someplace. And what he said is, when somebody's next to him all pissed off and everything about the flight being canceled, he looks at him and says, I would rather be down here wishing I was up there than being up there wishing I was down here. And that has stuck with me my whole life. And I travel a lot, and flights get canceled all the time. So there's a lot of different, like, Bring Out the Best in People by Aubrey Daniels talks about picks and nicks, positive immediate criticism and negative immediate criticism. So the different nuggets that I've taken from each of those books literally affect me every single day right now. You got to wake up with a skip in your step, smile on your face. Even when it sucks, you still gotta. So I was talking to Bill. Where's Bill at? I was meeting with him at the bar, and he asked me how I was doing. And I don't know if he remembers what my answer is, but my answer is always great. And I've had a bad couple months, but life is still great. So I get that. Like, if you read Dale Carnegie's book, that's what it talks about, is having a smile on your face every day. So I've taken all those little nuggets, and that's who I've become.
Love it. In the last 5 years, what new belief, behavior, or habit has most improved your life?
You know, that's funny. Money's just a resource. That's what's changed my life. When you look at money in a different way, as a resource and not as chasing the dream, then your life will change. Like I was talking about the $100,000 and screaming at the broker and so on. When I sold my first property, I sold 14 properties for $115 million. And when I sold my first property in that portfolio, I made $1.8 million on that one property alone. When you realize that you put that kind of money in the bank and it enables you to do other things for other people, it then becomes a resource. So I always say it's like having a toolbox, and you might have a toolbox. I know some people aren't watching. That's only a little handheld toolbox that has a hammer and screwdrivers and pliers in it. And I've got a toolbox that's size of a workshop. I just have more tools in my toolbox. When you look at it that way, there's people in this room that probably have more tools in their toolbox than I do. It's just a tool. That literally changed not the money part of it changed my life, because I started thinking about that prior to cashing out my first go around, is money's just a tool, and some people have a bigger toolbox than I do.
And if you don't have that tool, find the person with the tool and figuring out how you can work together.
Well, yes, but you have to add value to that relationship, and you have to do it without any intent of having something in return.
How can people reach out to you?
I always say it's JC Manus at store without an E, suite.com. It's 210-818-1496. And I always say, come join the fun.
Love it. Love it. All right. Audience Q&A. All right. Who's first?
So, John, is your preference starting from scratch with land or buying other storage units? What is your preference?
That's a great question. I knew you were going to come up with some great questions today. I would rather buy existing. And the reason I would rather buy existing is it has cash flow to it already. So if I'm buying on what they call yield or that return, I know I can at least pay the mortgage. When you develop from the ground up, you have a 3-year, you have a 1-year cycle for permitting, you have a 1-year cycle for building it, and then you have 2 years till you get to a 50% occupancy level. So it's 4 years before you're close to breaking even. Well, if you're going to build a property today, like I'm going to call it a 25,000 square foot property, it's going to be about $2 million just for the buildings and the land. Maybe a little bit more for soft costs and stuff.
But you have done that?
I do not.
You not
I
at
did
all.
one. Mm-hmm. I bought a piece of land in Round Rock, Texas. We were 4 years into it. I sold after 4 years of going through permitting, the pain, all of that kind of stuff. I sold the property, and me and my business partners split up a whole $120,000. No.
What is your preferred number of units to look for as a minimum?
That's a great question. So if you're looking to buy a job and you want to be the person picking up trash, filling out leases, meeting the customers there, then buy a small property. I will say to you, you'll make money at it. You'll make cash flow off of it, but you'll be the one on the phone, things like that. You could probably buy a $500,000 property or a $700,000 property. And if you look at it that way, it's going to be 50 units or 70 units, doing the basic math. You'll be able to lease that up, fix it up, all of that. Probably sell the $700,000 property in 5 years for close to $1 million, and the mortgage will be paid down and all. You'll make $200,000-$300,000 off of that property in a 5-year time frame, but you'll have a job.
My last question.
For me,
Yeah.
I want to finish that answer.
Oh,
For
go
me,
ahead.
it has to be above 25,000 square foot, and it has to be doing more than $25,000 a month for me to buy it, because I don't want a job. I hire people and put them in the store, and they run the property. So it has to have enough money to pay for my labor. And that's where the bigger properties are better for my portfolio. But for the people I want to cater to both audiences. For the people in the room or that's listening on the podcast, you might want to buy a small property and make $100,000, $200,000, $300,000 in a couple of years. Part-time, not a bad gig.
What is your preferred mix of the size of the units? So I know I've rented from a unit where you do drive the truck through or your car, and then the ones where you don't have the option and you can get small 10 by 10 or what? What's your preferred mix of size of units?
Typically speaking, the smaller units are limited, like your 5x5s and your 5x10s are harder to rent. Unless you're in downtown Houston, they're easier to rent. But if you're going suburbia, secondary, tertiary kind of markets, your medium to larger sizes are better because the smaller spaces out there are harder to rent. In the city living, they store their kayaks and their bicycles and things in the smaller units. In the suburbs, they store all the crap that you have in your garage. They store that stuff. So you want a 10 by 15, 10 by 20s, 10 by 30s, those kinds. So depends on where you're at to what you're trying to accomplish. The demographics different in different demographics.
Okay.
In different areas.
Thank you very much.
Thank you. Great questions. Thank you.
Before we move to the next question, when you're networking and you're talking with folks, and you have to listen carefully, when you're talking with an expert based on the specific nature in which they're answering questions. Like that was a very specific thing. You're giving actual unit sizes, not just in general for an overall market, but specific sub-markets within that market. That's how you know someone's an expert.
That's all BS. You realize that, right? Do you know what that means? Now, that means belief system. It's not what you thought it meant. It's all my belief system. No, I've been doing it 19 years. I mean, at some point, you'll learn a couple things.
A lot of my clients right now are looking to place to park funds. Do you have any place where they can start investing right now?
Absolutely. Yes.
And so if they invest with you, do you have funds or do you have individual projects that they can go into?
Ours is it's not a fund. It's a fund structure.
Okay.
We're following all the SEC guidelines, PPM, all that kind of stuff. But it is a $23 million raise. But it's not specific. It's spread out. It balances their investment. Yep.
How is it?
Great question.
What's the minimum?
Technically speaking, there isn't one.
$1.
So
No.
there is. It says in the PPM, every dollar equals 1 unit is what it says. But in fairness to me, I can't raise $23 million at $1 at a time. So the $50,000 checks, $100,000 checks are easier for us to manage that many investors. So, but there is no minimum. Like somebody came up with $25,000, you can invest. Like I bought a property off a guy in Beaumont, Texas, and he called me last week and he said, I got 10 grand. Can I invest with you? And I said, yes. So
And if a lot of this syndications, funds, what's the minimum, if that's foreign to you, do yourself a huge favor before ever investing in one. Like learn that language so you know exactly what those parameters are. And you can also ask the right questions to make sure that, you know what you're interested in meets your investment, profile, what you're looking for.
You can call me. I gave the number 210-818-1496. You can call me and I will walk you through that. I won't always take your money. I don't take everybody's money because it's not right for you. I will give you honest answers. So I'll help you through some of that language. I always say I dumb it down I don't dumb it down for you. I dumb it down for me. I take these big words that everybody says, like cap rates and blah, 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 and I put it in layman's terms for myself. So I'll do that for you if you give me a call.
Next question.
How you doing?
Great.
So I heard you say that you don't particularly do like from ground up, like buy land and everything. So do you look for businesses that are probably, I guess you can say people are trying to sell that they feel like their business is failing, and then you go in, buy the business, and it might not be failing the way that you're going to operate it, but it may have been failing for them, and you get it at a pretty good price or whatever, and then your profit margin. How have you ever done anything like that? And if you did, how did it work out for you?
That's all I do. So I'll put it in the technical terms that people say. I buy undermanaged, under-enhanced, and under-expanded self-storage properties, or what you know as the mom and pop. I call them the bruised banana. So you're driving down the road, it's tan with brown doors, the real ugly ones. You know what I'm talking about? I call it the bruised banana because that's what it looks like. And then I repaint them, do an office remodel, put in new gates, cameras, lights, all that kind of stuff. And then here's the beauty. I raise everybody's rent because I give them a better product. And with that increased value of revenue, same expense structure, higher NOI, I instantly raise the value. How I've done with that? I've done pretty good. So I was telling Derek a little bit ago that the lowest return that I've given back investors was 13%. When I sold the portfolio, we averaged 35% to our investors.
Sounds just like real estate investing.
Yeah, it sounds like it, doesn't it? Yeah. Thanks, man.
So is the business seasonal? In other words, do there need to be certain circumstances going on in the marketplace for it to be optimum to buy?
That's a great question. Yes and yes. So I bought a property in Lake Charles after 3 hurricanes. Peak of occupancy, right? Okay, but what I did is I underwrote the occupancy to come down. I've averaged giving investors 11% return on that cash every quarter by planning it to go down. So it is, environments do affect that. Seasonality, yes. So the beauty of our business model is the opposite of retail that I'm used to. During September, October, November, December, retail is off the charts, right? We're going like this, downward, and that's our slowest part of the year. So if you're in warm climate, like we are here in Texas, that's the best time to send aggressive rent increases because nobody wants to sweat their ass off cleaning out their space. Or if you have a property in Buffalo, New York, you send them in the wintertime when there's 30 inches of snow on the ground because nobody wants to clean out their space in 30 inches of snow. So there is seasonality to the operational aspect and the rental aspect based on what I would call the opposite of retail. So our lowest point is December, January are pretty much equal, where like in retail, December is your biggest month and January is nothing. They're pretty much equal. And then as the spring season, the moving season, everybody trying to get out right after school, move from this neighborhood to that neighborhood. We peak in August is what we do.
So assume the numbers work. Assume that you have the opportunity to optimize. Are there still deals that your eyes and experience have taught you to not buy, even when the numbers work?
Absolutely. So yes, just like any real estate, storage has been the best when it comes to being recession resistant. It hasn't been recession proof. So the biggest thing that has affected us in storage is the last 2 years of the administration that's been in with inflation, things like that. It is like you guys have experienced in single family homes. It's come to a screeching halt. Like, I was looking at numbers today, and my numbers for this month are almost identical to last year at the same time. We're actually, in my whole portfolio, we're 4 more rentals above what we were last year, this time of the year. And last year sucked. So if you think about it, we're going to be trying to dig out of this economy probably for the next year or two until it gets better. For me, there's certain markets I wouldn't go into. I own 2 properties in Beaumont. Beaumont, based on the economy, has probably been hit the hardest with refineries, things like that, over the last 4 years. I bought them 3 years ago. So some of that is economy cycle that has taught me that, but a lot of your bigger money, bigger than what we are, chases Class A, Class B, in Class A and Class B markets. I tend to chase suburban, secondary, and tertiary markets, and you get a harder hit in some of those areas, but you also get a better return in some of those areas when the market's up. So,
is there a rule of thumb for, because of what you've described, what can happen? Is there a rule of thumb for retaining earnings in order to make sure you can ride what you didn't expect?
Time and liquidity. So the beauty, I tell this story all the time, is I sold 14 properties for $115 million, September of 2021. I could not have timed the peak of the market any better. I got a 4.2 cap on my portfolio. Put a lot of liquidity in my pocket that now lets me withstand the last couple of years. So 5 of my deals I've had to put money into to keep them going out of 21. So, and 2 of them are Beaumont. But some of those deals I've had to support with liquidity until the market gets better and I can sell them to make a profit. Time heals that wound.
What are your 3 biggest gotchas?
What do you mean by that question?
The things that have bit you on individual properties.
On individual properties?
Or your market overall.
So that's why I asked that question is the biggest things bit me is big money. So if you're going to go out for really big money, like $10 million, $20 million, $30 million checks, that's bit me. So like when I did my first deal, I paid a $46,000 fee to get a loan and they dropped me and I couldn't do anything about it. It's when we had no money. $46,000 was a big deal. So that bit me. As far as like for because it's an operating business, the biggest thing that bites us is the person you put in the office. They can make or break you. So, you're hiring $15, $16, $17 an hour people and you're putting them in a $5, $10 million property. Sometimes that just doesn't make sense.
So you're not doing an all electronic.
No, I still believe people buy from people. So yeah, so this big push on remote management for the smaller properties makes sense. For the bigger ones, doesn't make sense. Like people are still looking for service.
I know we have one more question in the back.
So moving from single family houses in Jersey, 8 hours away, to this large portfolio, and then obviously you talked about getting involved. Network is your net worth, right?
That is absolutely.
For people in the real estate, single family, multifamily, managing people's homes, in a sense, what does that mean for you as far as contractors, subcontractors, getting work done, getting the place painted, making the bruised banana, the beautiful banana that, whether you like them green or bruised. I like them bruised, by the way.
Well, Depends if you're making banana bread. So,
Touche. But it speaks onto your network, right? And using people to beautify that and bring those rents up and make it look pretty. And how does that work for someone where if they're doing single family, multifamily, there's 30 trades that need to do one unit. Obviously, you've got a concrete slab and a couple walls. How does that work for self-storage?
so the good news is one of my best friends, Dave McKay, owns a company called Painting and More. I haven't figured out the more part of that yet.
Everything.
Yes.
Painting and all.
Yes. I've been friends with him. He was a contractor for Uncle Bob's when I became a district manager in San Antonio. I became really, really, really good friends with him. So that part of it's been easy. We've made money together and lost money together and all that kind of stuff. But again, what ends up happening is the more and more you build a reputation, the more and more people come to you. So I've had 3 or 4 different painters come to me that I've used. I've had, the office remodels thing. The biggest issue we have is getting the little tiny stuff done. Because nobody wants to come out and fix one door. They're
Very similar, almost.
Yeah.
Even though that you're not dealing with one unit having kitchen sinks, countertops, cabinets, etc. You're still dealing with the same issue. It's just that was my curiosity just between selves. It sounds so easy in theory.
It is. It's a lot of work. Don't pretend like I hear a lot of people say, I'm going to go into storage because it's set it and forget it. It is not.
No, you keep saying operational business.
It is
it's
not.
the exact same thing as you're dealing with people's stuff.
Yeah.
Right.
Yeah.
And the apartments that I've been involved in, you're dealing with someone's home.
Yep.
You're dealing with someone's home. It's just 4 walls, and they just store their stuff, and they love their stuff.
Oh, they love
They
we're
love
in America, baby.
That's right. That's right.
Do not tell anybody.
I know. Consumerism is your favorite thing.
That's
right?
the dirty little secret of storage. Is the stuff they put in there is not worth what they pay me in rent.
I know. I got to stop doing the storage war stuff. Yeah. Thank you very much, gentlemen.
Thanks.